Hello everyone, petar.jacimovic here from vikinganalysis.com. I want to post amazing progress on the Japanese yen pairs where I established positions 2 days ago. So few days ago, this is very price went to all my take profits. I took all take profits here on the yen currency, on the euro yen and USD yen. So if you remember, if you follow my work, I sold it around 132.5. I sold the euro yen 2 transactions, 0.5 risk on each. I took a 1-3 ratio here. That was a price around 131. And then price went all again to test this, but we saw this is extension. There is no real power here in from the buying from the buyers, and price again went lower and actually met my second take profit and almost 1.5 risk reward ratio, plus 150 pips. And it's total about, you know, amazing how this is a clear example of professional entry. So this is a very strong, very good entry level, very good scaling out here. First of all, this is a how professional approach you should, you know, and everyone should focus on. So first of all, this was a nice opportunity, nice market conditions. Before everything, we saw the massive buying climax. You know, its price went like in a 5 minutes. It went like 260 pips. Massive buying climax. You know, and everyone, you know, crowd is, you know, insane. Then we got a automatic rally here. Price dropped 187 pips in about 15 minutes. You know, we saw that automatic rally, and price went all the way again to test the climatic area. But we saw also on the futures market and on the forex there is no actual real power from buyers to move this higher. And I started to sell at that point with a stop loss again around 30-35 pips. That was enough at this stage on these market conditions. And again, I took my first 1-3 ratio at this stage here, and then my almost 1.5 risk reward ratio at this stage here. So this is amazing from the entry level, from the market conditions, and then securing position and scaling out. First scale out was here, and then second scale out in second position. Actually, I scaled out around 130, 65, 130.60 area. I will speak in this video more about what you need to focus on and what it's actually big difference between the professional approach and the average trader approach on the forex market, which I think that it's really, you really need to take this seriously, what I will explain you, and you know, and go and work on that. First of all, like everything pretty much in the life, in any type of everything what you do, you need basically to have the right knowledge, the proper knowledge, and to understand the material you work. We speak about the forex, and you need to understand what drives the market, what's the key factors, how the liquidity is created by supply demand, on which times actually liquidity is the largest, and how you can read that liquidity and use that in your advantage to benefit. Because at the end of the day, it's most important thing is actually to take the profit and earn the money in you know, in this business. But one big but, you must do that with a very good risk control. So that's the point, to keep this, to have the stable risk control, to don't overextend risk, but at the same time to do very decent returns over a period, you know, over years, you know. So also what I want to speak very, so the point here is, people, and I see on all forums and websites and so on, traders trying to trade every day, every condition, every currency pair. That's totally bad. That's totally wrong in professional world, because you don't want to be all time, every hour on the market and try to predict every pair in every moment. It's totally wrong. You don't need to do that, and not just you don't need to do that, it's actually that's a sure loss game. So in that game you will for sure lose, you know, that type of game that you won't try to predict every market, every hour, every day, you know, and every currency pair. So that's not how the professionals are doing. What we are doing, okay, and what my colleagues doing, what the money managers, large money managers are doing, it's we wait this certain market conditions, we wait the large liquidity, we wait something big which will bring the money on the FX, which will bring the investors, hedge funds, and from that strong liquidity we try to take the part, let's say, of the cake, and we try to benefit. Okay, so you don't need and you don't want to be every day on every currency pair trying to predict where we'll go pair, because that's 100%, I will assure you that you will lose in that type of game. So the basic point is you need to know to read volume analysis, to read that, to weigh the good opportunity where we have the large, for example, volume spikes, 300% volume rising from the average, or 500,000% volume increasing, big volume spikes, and later on observe the nature of that big activity and position yourself. That's the key point, you know. So the qualitative setups don't happen often, don't happen every day. It's basically usually it's the strong liquidity is caused by a large news, the interest rate decisions, speeches from the you know, for example, Draghi, or from the central bankers, you know. Also for some big reports like GDP, it can be unemployment, employment, big differences in the numbers, which create some big liquidity and create attention from the banks and hedge funds, which are main drivers on the FX market, to participate, you know. And you want to do as well, to try to ride with them. But again, you need to have the big knowledge for that, and it's not easy. You need to practice and practice, you need the right knowledge and practice on that knowledge. Okay, so for example, in this setup, for example, I took enough return for the whole month. Why? Because if I take the 3 or 3.5% this month, and I have the very low drawdown, and I keep the risk under control, I will be able, with this kind of setups every month, usually I will see this kind of opportunities, usually every month, few times, depend of the volatility of that month. But if you take the 3-4% monthly, that's about 30 to 50% yearly. With a drawdown relatively low, you can keep even under 5% or 5 to 10% drawdown on the return yearly of the 30 to 50%. And that's actually the job of the professional trader. You don't want to put to, you know, to say, I know everything, I will risk 2% in this setup because this happened just once a month. No, because risk is at the first place. Risk is at the first place, profit will come, you scale out, in that way you raise your account. Okay, so the maximum, my advice, and just if you're master and if you trade personally for yourself, the maximum risk is absolutely 1% in this kind of setup, going for around 3 to 5 or even % in return. But that's maximum. I usually like to risk 0.5 and keep drawdown to not go above 5%, the maximum drawdown account. But 5 to 10, it's okay to have the drawdown, but with return of 30, 50 or more if you're able to do yearly. Okay, that's one point, that's one part I wanted to tell you. So the 90% of the traders basically losing because of lack of knowledge. That's the first thing. Second thing, very important, is psychological factor, the greed factor, the factor where you must trade every day, or I don't know, something will happen. In that psychology, that you tend to trade every day and think that every day it's a good condition for to trade, it's actually a totally wrong approach. Okay? Again, you like to trade the specific market conditions where the liquidity is largest, so the potential of your success is largest, and that's simple. It cannot be simpler than that. You don't like to trade the sideways market, you don't like to trade the low liquidity market, because everything is possible on that. It doesn't matter what technique you're using, what strategy you're using. When there is no liquidity, market is driven by weak holders. Weak holders, I mean on non-institutional traders. So some retail traders, so it's going up and downs, break the swing lows, break the swing highs, take the stop losses away, and on that way retails are totally confused. Okay, not just retails, even some of the managers creating these mistakes because they don't have patience to wait the right conditions to have the highest probability setups with the highest potential risk-reward ratio. So these are key parts. I see where is the big problem to most of the traders. And again, I'm in this business about 8 years. I traded with large investors. I'm expanding my business right now. I'm planning also my own company, probably to open during this year or maybe next year, and trying to raise the fund, you know, to have the own portfolio. But my success started actually 4 years ago, when I saw what is most important, spoke with already successful veteran traders, and from that point practiced about the volume analysis, price action, of course combining the classic patterns, formations which are used many years, and using the Fibonacci work like Fibonacci retracement expansion tools to help me to identify when to scale out, when is potential good entry area, together with volume price action analysis. So my advice, again, my advice is to really, if you want to start professionally to trade, to have a high level of success, to have the very good entry levels, how to you know, to weigh the strong market conditions to establish position, and how to scale out properly. All that, again, my advice is to start my mentorship program and don't lose time with anything else, because I will explain you something which you will work for your life, and you will not need anything else, just practicing on the knowledge you will get from my mentorship program, and I will give you full support after program. But again, if you're interested in that, you can add me on the Skype. I will write my Skype in the description of the video, so you can add me and we can start potential cooperation. Also, if you want to, if you're an investor and you want to deposit money and that you want me to be your manager, of course I'm interested in cooperation, and I'm also doing that. Let's back to the Forex. Right now, I also, one thing you must know, why this is happening. So if you wonder why, pardon, this is, I can tell you this in the one quote, very good quote, and it's like this: bull markets are born on pessimism, grow on skepticism, and mature on optimism, and die on euphoria. The time of the maximum pessimism is the best time to buy, and the time of maximum optimism is the best time to sell. Translating this into the real example, the real trading example, is exactly like this. What's the buying climax? The buying climax phenomenon we use in the volume analysts using. You know, this is discovered by Richard Wyckoff later on. There is also something written on by Tom Williams, the volume spread analysis, but the key is the Wyckoff analysis, which actually worked back 100 years ago. It's one of the most successful traders, investors in this business. This phenomenon of the buying climax is basically the widespread, the ultra ultra high volume, so volume spike on the ultra wide range, is something which is calling the maximum optimism. This is an extension of the optimism. It's usually happen after some big news events, interest rates, GDP or something, some big speeches or some economy factors. Usually after the news. In this case, what we got here is the cut rate of by 10 base points from the Bank of Japan. In that time, we created a liquidity crowd in all the the managers, and everything was waiting for that news. And this is reaction. It's a first reaction, 250 pips. One thing, you don't want to trade before the news or during the news because of the big risk. So you don't want to gamble and try to predict the news. It's totally ridiculous to try to predict the news because the crowd and banks can react. It doesn't matter what the result of the news, they will react how they planned. So you cannot predict that, and that game you will for sure lose on the longer term. From time to time you can be right, but don't think that you understand and you can predict news or to trade during the news. So you actually, the professionals, you just wait to see how the crowd and banks, what will happen, what the crowd will do, what how the price will price reflect on this type of news. Then that phenomenon buying climax with this massive wide spread of the bar and massive volume spike. This is something from the quote, it's called maximum optimism. Optimism is the best time to sell. We got buying climax, then the first automatic rally, which Wyckoff explained in his books, and after the automatic rally, price went to test again this area. This is my first entry. I actually established 2 positions here, and I scale out on the expansion level here, 61.8, and that was a very good scale out. I didn't wait automatic rally. This was my second target, because the first we have this one, and Fibonacci war helped me here to scale up. But later on, price went again near this area, didn't touch this, and went lower to the my, actually, where is the automatic rally swing low, and even tested 100% expansion in the pip, 130.35, and rejected for about 40 pips. So I scale my second resection, actually scale out here, and I took very good return even for a whole month, because taking that 3, 4, 5% monthly, that's it. With a low drawdown, you don't need anything else in professional world. It's very good job, very good job. And all this with very low risk trading and risk under control, which is most important thing. So again, this is example how using the volume analysis, price action combined with Fibonacci work, you first of all use the debt conditions we got, and that surprise of the Bank of Japan, which lowered the interest rate. We use that conditions on the market in our favor, and we benefit from that. That's the job of the professional trader, to use conditions, liquidity in your favor. Something big happening, you use in your favor. Of course, you will not be always right, but you don't need to be always right, because you have the good risk reward ratio potential in every setup. Again, I'm going for minimum 1-3 ratio, usually tend to go 1-3, sometimes 1-2 if there is no space for 1-3, but usually 1-3, even to 1-5, 6, 7 risk reward ratio in return. So again, this is how the professional approach looks like. Okay, this is also USDN. Same thing. I established here positions. One position here, 140 pips, and 1-3 ratio in this setup. We got massive volume spike. Price went even higher, but with no success later on. We see no demand here to move higher. So this is something which called the maximum optimism is the best time from for professionals to sell. Okay. Now, what we expect. Now it doesn't matter we scale out all positions. We are right now testing the automatic rally swing low. The price can even totally absorb this. It can even back higher. But potentially, we may expect total absorption of the buying climax. But time will tell us that. We don't want to predict that. We sold there, we scale out, now we are in the waiting. Some professionals maybe have some positions which will actually lead to the short-term position and wait total absorption potential of this and even larger drop. But again, you don't need to do that. You can do from time to time also that, but the key thing is scaling out in the good risk ratios and waiting to new opportunities and then scale out again, and that's how you raise account. So I will also show you the USD CAD example. You can see every time when there is some big liquidity, if you have enough knowledge, that's why I advise you my mentorship program to teach you all this, to read the volume activity, to read the news, to read the fact, to see the facts, you know, and then establish position, and that's what you need to do. So if you remember, this was a January 20, when the Bank of Canada, actually everyone expected lower interest rates, okay, because the bad economy, oil, you know, dropped on the very, very low levels. And what happened? They said, no, we are not afraid of that oil. We have under control everything, you know. And they actually surprised a little bit some of the analysts, you know, and some of the banks. They surprised by don't doing anything in the time when the oil was at a very low level. How the price reacted? We got that liquidity we want. First reaction, 136 low. The automatic rally, 140 pips higher. But how you actually trade this? In this example, we got massive supply, first 30 minutes, and then in the next 30 minutes, upward. Now, what is this? We go lower, upward. But one big thing is what happened after. And also, where that occurred, where this reaction happened. Basically, this reaction happened, and this is what I call the maximum optimism. This happened near the highest high points in the USD Canadian dollar, and this is maximum from the buyers who wanted to actually back this higher in the trend, let's call it technical trend. But the reality is like this: professionals sell when? On the maximum optimism. And the time where the maximum optimism? Usually, again, this occurs when the buyers extend, you know, on the news. First reaction was supply. Buyers try to you know, to do that on their you know, on the technical uptrend and continue this. Doesn't matter which Bank of Canada kept the rates unchanged. What happened after? It's key thing. We went lower, we broke the swing low, and we saw no demand testing of the climatic area. So this is a beautiful sell setup. Even though in this example, I'll just go here. In this example, you saw, look at the 1 hour, look at this, look at how it faked many of traders, and they said, oh my god, this continue higher, it's a technical upward trend, it's rejection from moving average, you know, this must go higher. But in reality, no, that's actually professional selling. You know, I will sell at this stage the next day here when I saw the lack of demand, and I right now got exactly picture that this is actually buying climax confirmed, and that actually we use this to sell. You can sell even to risk 50-60 pips at this stage, and look at the drop. Look at the drop. I will just zoom you out so you can see where we are right now. Okay, 600 points from the original, or even more, to original selling, risking 50-60 pips at this stage. In the same day, you got unbelievable almost 1.4 and 1.5 ratio. That's it. You know, you finished your war. You take 2-3% just from this. If you have 2 transactions, you want to let one to ride for some short midterm selling here and let the ride that, you can do that. Absolutely. Scale out some 1-3-4 ratio here, let this transaction to even more larger profit. That's how the professionals are trading. You know, that's the key part, key point. How to do this is you need to follow intermarket relation. You need to know to read the volume activity. You need to know Wyckoff analysis, what is the volume spread analysis, combined with price action, create a multi-Fibonacci zone. It's a not easy job, but you can absolutely learn, and everyone can learn that if they have the will to do this and practice later on that. Okay, so I just showed you some examples what happened in near past. Okay, and how I took very strong returns on yen. Probably yen can continue lower, but again, I decided to scale out, wait the next opportunity, because I'm more short-term oriented. So I want to scale out 1-3-4-5 ratio. I scale out. Sometimes I have the transaction, the 2 transactions, one to scale out and one to let some midterm prospective position to catch unbelievably. Because if you know, in this example, my risk was about 35 pips, and if I let the yen and yen continue to absorb totally this and then just slide down, I will be able to take about, you know, even 300-400 pips, risking just 40 pips. You know, that's why you can decide to from time to time let one transaction and build 2 transactions in the same level, scale out one, scale out second, put on the larger take profits targets. So this is about that. Also about some failure to show you what is the reality on the forex. The reality is most of the traders actually, for example, everyone see this upward trend line. Yeah, everyone see the breakout. Everyone see the breakout, even though the key swing lows, if you follow the price action, these swing highs became a support. Price held here, but it's broken very strongly here. As you see, price very well close below. Even on the 4-hour, we are below 200. Everything happened near the 200 MA. That's all good. Even though if you go to the daily time frame, we are massive downward trend, technical downward trend, and we broke the swing low upward trend line. We actually rejected from that point, and everyone right now expect lower price, you know, on the, for example, Australian dollar, and I saw many traders actually jumped into sell here. Okay, they jumped to sell, but the reality, I can show you the millions of examples, more examples of the failures than of the winners in any pattern, without knowledge of the volume. This where is right now Australian dollar, not just Australian dollar, pretty much all the pairs except yen and Canadian dollar. Everything is pretty much right now driven by weak holders. Everything except right now, again, Canadian, because of that news of Canada, and Japanese yen. Why is that? Because the professionals are actually trading right now, and we got the most liquidity and biggest volume spikes and amazing buying climatic actions, and on the Canadian USD, Canadian dollar, Canadian pairs, and on the Japanese. So this one, everything you trade besides these two major, it's big risk. It doesn't matter if you trade intraday, if you scalp, if you want to trade the short-term, mid-term, long-term perspective, it's just not the right moment to trade. Conditions are not good. Market is driven by weak holders. The volume is pretty average. It's going up and downs, breaking the swing lows, back up the swing lows, breaking the trend line, back up the trend lines, doing the many fake breakouts. And on that way, absolutely don't let any trader to actually create some stable results. You know, pardon. What happened here? You sold here, and you say, "Oh my God, it's broken." You know, we broke the trend line, we broke the swing highs, which was also very, very strong support. We broke everything, so okay, I can right now sell at this stage. And look at this, 100 pips higher. Immediately back up, closing everyone, and potentially it can even close even the people, the traders who went all the way to put 120, 30 pips stop loss. Now they are driven, and they pretty much, they are nervous because the stop loss is very close. You know, can the Australian take the swing highs out? You know, but it can, because it's not driven by institutional money, and Australian can do whatever. It can go even higher to 300 pips, 400 pips, until there is no big liquidity reaction and something big happens. So it brings the professional money, banks and hedge funds, to actually trade the Australian dollar. So you know, it's a clear example how something, it can looks beautifully, but because you trade a sideways market in volume terms, there is no big actions. You trade market which is driven by weak holders. The next example is the GBP/USD. This is a classic example of the classic strong breakout. You know, and if you check the range of this, you can call the trading range at this stage. It was the trading range, let's call it this way, and from low to high, 340 pips. Price broke this. We are in technical downward trend, as you see, massive downward trend. If you're watching that way, even if you're a trend trader, it was a nice opportunity even here to establish sell positions. Am I right? So, you know, you watching this way. Oh my God, we broke the channel, we broke the diagonal, we are in technical downtrend, we saw the rejection, retesting, or popularly said, retesting of the channel, and it was confirmed. Look at the bars. Oh my God, look, this is a bearish engulfing some evening, you know, evening star. We must sell there. And yeah, but look at what's the reality. You know, 160 pips, 280 pips, 280 pips from the potential entry selling. You know, and if we'll not even speak if there is a, you know, if there is a, if you put all the way here 150 and then you think, oh my God, but this must go selling, I will add here because it's near the swing highs. You know, it did a fake breakout of the, you know, swing highs, so it must go right now lower. So you add another selling and then another push to 100 pips higher, and that's absolutely what I'm telling you. Why is this happening? First of all, GBP is absolutely neutral currency fundamentally. You know, they wanted to hike the rate even last year. They didn't have conditions for that. They still plan to hike the rate. We have some mixed economy news which came from the United Kingdom. There is also, they plan to have their own currency, the new, you know, about the Eurozone. They want to exit the Eurozone. You know, there is a lot of speech there. Anyway, the key point is there is no big liquidity and something big happen on the GBP currency to bring attention to professionals to actually trade this. And if there is no professional money involved from the professionals, from the banks, from the big banks, and from the big hedge funds or money managers, everyone will have hard time to trade, because again you need right conditions, good conditions to take the part of the cake, let's say that way, when the conditions happen. When they don't happen, it's better don't trade. Believe me, don't trade. You can only lose money. I can show you millions of examples when everything was correct by technical side, you used to trade, you know, like bearish. This was a bearish flag. We also got some head and shoulders. For example, just one example, USD head and shoulder formation at this stage here. You know, everyone see this. Am I right? Head and shoulder formation. Neckline, broken neckline. Here. Okay, what happened? Reality? No. 50 pip, maybe 50 pip drop, and that's it. You know, if your risk was even high, you know, it's not even 1:1 ratio, and probably you know, traders who took here, they wanted to see this level to exit, and what happened? 200 and more pips higher, and even it's tend to go even higher. So you see, even in strong downward trend, euro is in QE program. That's all good. Euro is in QE program, but what happened is technically, you know, potential good short setup fundamentally, and there is no liquidity in that moment to actually be the professional selling at this stage here. This buying climax, for example, was massive buying climax, and I spoke about this, but the problem with this is this buying climax actually, comparing the intermarket analysis, it wasn't actually the real buying climax, because if you check the other markets, even the futures market and other markets, if you check the stocks, what happened at that stage, this actually wasn't a real volume spike. It was just strong upward widespread in the bar, but it's not a buying climax in terms of the volume. Volume was above the average, was high, but it wasn't ultra high. And the reason why this went lower, it went lower a bit, but why it didn't have the power to recover and all the way to absorb, is because this wasn't actually the real volume buying climax. It was just in the range, but not in the volume spike. On the tick volume, it was spike, but on other markets like futures, and you know, you have also commitment of traders, COT reports, and so on. You will see that actually there is no big change there, which actually means that this can be actually sign of strength more than selling on optimism, on the maximum of optimism. This can be something from the quote which called the bull markets are born on pessimism, grown skepticism. This can be something which is actually born on pessimism, some bull market born on pessimism, which can bring the EURUSD to some extension, to some corrective phase, let's say larger corrective phase. We may see 61.8, like I said many times in my videos. This area, it's very close, and later on Fibonacci expansion 100%, and so on and so on. Okay. Okay, so do I trade this and buy? No, because do I trade actually USD, and what my view on USD is? I'm neutral on this. Why? Why I didn't build a buying position, for example? Because I didn't saw that activity in the volume. I saw just widespread of the bar. That's okay. That's very, very wide. I mean, it's 400 pips. But in the volume, no. If I compare the intermarket analysis, and I do intermarket analysis, there is actually no real liquidity there. Okay, which means that this can still be it can be a potential sign of strength, But what's the most important, there is no professional money involved in this area and in the USD right now. Okay, that's the why USD going in trading in the sideways after that buying climax and not going anywhere. You understand? So buying climax, upward, downward, upward, downward in the trading range. How many days? Look at this, from the buying climax, exactly 40 days. You see? So you just don't trade this pair. I will not even speak about the mixed fundamentals, where you have the QE program from one side active QE program, from other side you have the dollar hike the rate in December. They kept the rate in the last interest rate decision, they kept the rate. So very, very mixed. Okay, even fundamentally mixed, even in the activity it's mixed, and it's sideways. It's reflecting on sideways on the market, but it tends to be more sign of the strength and more upward than the downward, but it's still for me neutral to establish any professional position. Okay, so again, this was more like my explanation about some key parts, key points of professional analyzing the market, and I hope I help you you know, in your trading and in your approach and your view on the forex, on anything, not just forex market. This is basically for every financial market, you know, stocks, futures, whatever you trade. This is a key principle to anything which you're able to see the chart and see the volume. So I hope you liked. Again, my final advice is don't lose time with trying to find some miracle technique. Don't lose time to some unprofessional, to waste time on some, go to some website and so on and so on and so on, trying to find some miracle, you know, some indicator or stuff like that, because that doesn't exist. What is the key thing, and what will totally change your approach and your you know, your success? If you're really successful, it can bring you even more success. So I didn't say that everyone, you know, it's unsuccessful, you know, but most of the traders are unsuccessful. So anyway, even if you're unsuccessful and you want to start a professional career and try and start that approach to change your mindset and think differently from the crowd, which are usually wrong, you must understand the volume analysis, intermarket analysis, to understand how the market moves, who are main drivers, and how to follow them. Also proper entry levels, to use the multi-Fibonacci work and so on. So everything this makes you a professional trader. My advice is to start my mentorship program in 7 days course. I also help you after the course, because I give you the full support after the program. I follow your progress on practice. We trade together. We are in touch on the Skype and so on and so on. So absolutely, what you will learn, you will not need anything else from the knowledge. You will just need to practice and work on yourself. To become literally to read the high volume when the big activity happens, to read and benefit from that. That is the key point. That's it. I hope you enjoyed. Follow me on the Forex Factory thread, the Art of Trading by Petar Serbia. You can subscribe there thread, and you can write the comments there if you liked my video. Also subscribe to my YouTube channel and like the video if you like. My website is vikofanalysis.com. I don't have so much time to update the website, but usually I post the key videos there and so on. In the future, I hope I will mentor someone who will later on write on the website on vikofanalysis.com, so I will have also help in that way, and that we some of my students who is the best and work and progress, you know, very good, later on it can be a writer. Together with me on vikofanalysis.com, we can create some team and so on and so on. So I'm happy for new cooperations. I hope you enjoyed this video, and thank you, and see ya in the next update, and when I see something good opportunity on the market. Bye bye and happy trading.